Greetings, members one and all of the Salivation Nation. Is the party over for gold and silver? Let's explore. This is the opinion of Todd Bubba Horowitz from Kitco, and this is a little bit of frustration. Welcome to the world for most of us, especially considering where things have been over the last few years with silver. But gold, this party could be over as well too here, according to Mr. Horowitz. For now, the answer is no, but it appears that the midnight hour could be fast approaching. Platinum has already reversed. Gold and silver have looked awful for a couple of weeks, but have managed to stay long through the proprietary algorithm that he promotes here. Gold clearly looks like it has made another lower high of 1750 in the August futures on Wednesday, June 10th. The picture is ugly and trajectory descending. However, we are still long until the signal reverses. Silver is almost identical to gold with a lower higher on the same date. The big difference today is silver looks to be breaking down through support and closer to a signal change. Let's take a look and see where the prices are. You can see both those metals are down. Platinum is actually up slightly, but gold is down about a quarter of a point, down $4.50, and silver is down 11 cents, over a half a point there. And so it is a little frustrating to see now for those who are bullish on gold and silver prices, because the markets are also down. Well, they're up a little bit slightly in trading, 100 points for both the S&P and the Dow Jones, but not enough to really cause much excitement. But the pressure on gold, silver, and platinum is more disturbing, with the actions in the equities, which are getting pounded. As of the writing of this article at 5 a.m. Eastern Time. We don't predict the next move, but the signals will change soon based off the current action. They are long gold and silver through today and won't reverse it until June the 16th. And so they remain long gold and silver, but short platinum. But this kind of piggybacks on what kind of the mood is, with gold ending with a slight loss as investors weigh on signs of a reemergence of the coronavirus cases. And this is kind of where the concern is out there. Gold futures finished lower on Monday, failing to derive support from a decline in the U.S. dollar or losses in global markets sparked by worries about growing evidence of rising cases of the coronavirus, according to Market Watch here. The gold market saw some selling overnight in Europe on news that China has locked down parts of Beijing, with funds were taking profits in gold and some margin calls forcing some selling, said Jeff Wright, Executive Vice President of Gold Mining Incorporated. He told Market Watch that gold's decline in the U.S. Monday was likely due to selling to generate cash. Where have we seen that before? Back in March, when the COVID-19 shutdowns began, we saw a lot of selling off to generate cash in the markets for gold and especially silver. And this is amid fears of a second wave of COVID-19. And really, we're only barely getting out of the first wave, at least here in the United States. China is a different story. We don't really know what's going on in China. Their numbers are low, according to the Johns Hopkins data. August gold lost 0.22%, $10.10, or 0.6% to settle at $17.27, as we saw here. Actually, the live markets here show it, $17.27. And so not a huge drop, but all this prediction about it going up like crazy may be a little while before we see that, unless things change, because Secretary Mnuchin says it is not recommending another shutdown, but some of these governors may differ and may shut down their economies in each of these states, depending. We're seeing increases in places like Arizona, which is a hot country all the time, or lot state. I'm sorry, it's a hot state most of the time, at least the southern portion. But yeah. Meanwhile, July silver was down as well as of the recording of this video, down 11 cents there. Traders appear to be more focused on the bearish prospects of reduced consumer demand for precious metals due to hobbled economies than on their safe haven aspects. And I think that is the difference here, according to Jim Wyckoff, a senior analyst at Kitco.com. There's always the push and pull of prices, especially for silver. Consumer demand for precious metals in the industrial sector, for consumer electronics and the like, that's going to keep prices low because there's not going to be much demand for the metal in that regard. And to this day, I think that is the push and pull, because investor demand is still, even though it's grown since this all started, it's really saved off, especially considering the ETFs out there. We're seeing an increased bullion demand that is not enough to cause the prices to really go up in the markets. The premiums go up, but not the spot price. Some market participants said the downturn in bullion may signal the monetary uneasiness by investors around the pandemic, but the failure of the dollar to rise as it did during the rout for financial markets in March may signal that the apparent deterioration of the appetite for risk on Wall Street may be a temporary one. Rafi Boyadijan, senior analyst at XM, in a Monday research note said that the greenback appeared to lose some steam, which perhaps is an indication that this risk-off episode may be nothing more than temporary market jitters. As gold futures settled, the dollar was down 0.5% at 96.8, based off the ICE US dollar index, DXY 0.61% loss, a gauge at the buck against a half dozen rivals. And a report showing business activity steadied in New York State in June after 2 months of record contractions, but also created some headwinds for precious metals. The Empire State Business Conditions Index rose 48 points to negative 0.2. In June, a reading so close to zero indicates steadying conditions. Economists had expected a reading of negative 30, according to a survey by Econoday. And that's another thing, too. If the economy starts to recover, and we see, even with a supposed resurgence in the coronavirus, that could keep precious metals low, too, because, the market, the economy could start to see a slow growth, even in a U-shaped pattern, which will bolster the markets and ease tensions for folks, which means they may not be looking for gold and silver to protect themselves, as the economy will start to kind of recover here. Market participants have been attuned to coronavirus cases that have started to surge. Once again, the most worrying element is a considerable surge in numbers in China, where the disease was first identified, and a rise in infection in a number of U.S. states. Investors have been bullish on assets considered risky, like stocks, as reopenings continue and gradual open up in an economy that is stultified in the epidemic. On Monday, however, global equities finished mostly lower, and benchmark U.S. stock indexes saw mixed trading as gold futures settled with the Dow Jones Industrial Average up 0.61%, moving lower as evidence of COVID-19 resurgence raised concerns that reopening efforts may be halted or reversed. While I understand the second wave concern, there is next to zero chance that we're going back to a March-style lockdown, said Wright. The U.S. population would not tolerate the loss of personal freedom and potential to crash the economy a second time. Other metals saw mixed trading on COMEX Monday. July copper fell 0.65%, fell 1.3 to $2.56 a pound. So, watch copper too, because that's going to give you an indicator of silver, probably a stronger indicator of what silver is going to do than some of what the other indicators with the safe haven demand. And so it's going to be very interesting to see how this plays out, for sure. But all of these, predictions that gold's going to go up to 18 or to $2,000 by the end of the year, that may not happen now, considering this fight between the the industrial side and the demand on the physical side as a hedge. We'll see how it plays out, especially for silver, but even for gold at this point. People selling off, wanting to go into the safe haven of cash. The dollar still relatively strong, all things considered here. By some measures, inflation hasn't taken off like some had thought it would a couple months ago, but we'll see. Really, it's still early on, and we've not really felt the impact of what the Federal Reserve has been doing and all of this relief money that is out there floating around now. Very interesting indeed. Fascinating the markets are, but as is always the case, when it comes down to it, gold and silver still are safe havens, I believe, and will protect us against economic instability. Even if we don't see it now, it will certainly in the future. So I hope you enjoyed this video. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for taking the time to watch. And I'm going to encourage you to please rate, share, comment, and subscribe.